Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, November 18th, 2021. The NASDAQ continued to follow current analysis in that the market is now moving in what I'm recognizing as a particular wave formation, and that continues to move the whole process forward as well. Today, we wrestled with breaking towards, first of all, we wrestled with breaking above 16,400. And then when we got there, it kind of wrestled with actually making that final push to get up to new all-time highs above 16,448. That was achieved. And on the first run, we got up to 16,490. And then the market backed off and came all the way back down and went back down to like 16,420, maybe even below a little bit, and then put in an additional rally. And then once again, did break finally above 16,490, and then finally got itself above 16,500, pulled back, but then some additional earnings reports this afternoon or this evening pulled the NASDAQ higher yet again. And that I can believe was going to continue now as the market continues to give a little bit more support to its ability to push towards that 16,608 area. We have several points in between. We have 16,539 would be next up as far as our Fibonacci resistance goes. And then we have 16,000, I want to say 582, and then 16,608. And I think all of this now is in the picture, being that the NASDAQ did manage to put in a very good showing today, and right now is up 194, and has been, I guess, 3 or 4 points higher than here. But what is more important is that we're getting that support from the buy side, which is going to continue to allow it to push higher. We will begin again to run into a lack of sellers unless so a lot's going to happen. Let me rephrase that. As far as if all we do is trade the future and we're not hedging it against somebody or something, then we're not going to be so willing to sell at points unknown. Because if the strength of the buyers is willing to push this market up to 16,700, and they're willing to do it tomorrow because of the way the options are trading and because of the way the underlying are trading, so be it, because they're hedging all the way up and then all the way down. So the trades that are being done are they're buying and they're selling. So they're doing both, and it's a complete trade where we're doing one side, selling it, looking to buy it cheaper. So there's a little bit of difference. And so as a day trader, we'll find more areas to buy than we will to sell, I believe. And that's if we're seeing still the same strength of the buyers as we saw today. But here's the caveat. As I've been saying all along, the volatility is strong in both sides. So if there is a time period where the buyers and the funds and the portfolio people put their buy orders through, whether it's after an opening, during an opening phase, or other periods during the day, these orders come in. But if there happens to be one where it was like their schedule was a large sell, the market can reverse off of showing some real total strength, reverse, and then just keep going. So in other words, it's like it's like you'll get a bullish engulfing bar, and the next bar next to it will be a bearish engulfing bar, and then another bullish bar. So this volatility goes two ways, and the caveat is that it's not as easy to see the strength of the buyers as this is unfolding, because you'll see it start to slow, but then here comes the next round. So determining whether it's actually a continuation pattern, or is it one where that was a one-off, it stops and then it resumes the trend at that moment, which at this time was up. The trend has been up. So that is my point today, revolving around that, is when you are trading, that you have to use really good risk management in a market like this. And that goes to both sides. So in other words, if you're shorting it and the market turns and it's running higher, you better employ good risk management, because now we're into an area where, hey, we don't have another point to say, hey, see that point on the chart right there, that previous high? That should be resistance. So you can gauge what possibly how much room you have against what you have done in the market. So be careful up here, because we're now seeing that they'll push and they will step in and pay 16,510, maybe up to 539, even up to these areas. Now, where are we? Again, minor wave 5, which I believe completes a very long sequence of degrees. And so within this minor 5, we are going to have 5 waves, or a complete impulse portion of the market, and that'll come as 1, 2, we have 3, and then 4. So we're right now pushing higher within that 5th wave, which should then complete the minor 5, which then should complete the intermediate 5, the primary 5, et cetera, et cetera. Now, having said that, I'm going to include it today as a part of the discussion. There's no indications yet, but if this market just really starts to blast from here, there are counts that would allow for it. And they're more evident in the S&P, not as clean here in the NASDAQ. But what we have been talking about is what could push the market up to these top levels of 17,000. What could push this market another 500 points? Well, I imagine we could ask that same question, what could push the market 700 points from that point? And it happened. Here we are knocking on the door. So it's the same story. We are getting towards the end of the cycle for earnings reports, but then we're moving straight into year end. And as we all know, there'll be a lot of winter dressing come to the year end, and it's going to revolve around these big tech titans that have been moving like monsters. These are like dinosaur companies clomping through the forest looking for something to eat and just coming down and grabbing and taking a whole big chunk. And whatever in there is ending up in this dinosaur's stomach as it clomps on through. And that's what it feels like sometimes when these buyers are moving in, because there's nothing for sale up here. We don't have anything to base it on unless we're trading options. So just as a trader, a day trader in the index, you don't want to get caught as the dinosaur's moving through and just grabbing everything in its way, taking it as lunch and moving on. So we're going to trade smart. We do have strong numbers coming on the upside. We have no economic numbers or anything coming out tomorrow. So what we do have is an expiration, and it's the November monthly. So it's a monthly expiration. And so there's much more on the line in terms of just the lot of larger the company. And so what I want to now throw into the folder is what's really coming into play right now and was moving up through strikes today. So bear with me. This is going to be a little bit longer in an update, but I think it's going to be worth it, because if we really pay attention to what's going on, you'll get an idea of where the market players may want to move things. We'll start here in Tesla and see if I can get this pulled up before it takes too long. Otherwise, we're waiting for the data. All right, so this is going to take too long. Forgive me on that, folks. Oh, there we go. All right. So November is what's expiring tomorrow. So I'm going to go down until I get to where we are, and we're at the money. Tesla, don't go too far. Sorry about that. We have right now it's the 1100, and then we have 1150 and 1200. And that's a big butterfly that's kind of been put in. You can see it's waffling right around, or it is centered around 1150. And so if all of these are out of the money, the butterfly basically will look very sweet, whoever has it on. But my guess is that they're going to want to push it up into the zone. So we do have that going on in Tesla. We have it going on in a lot of different stocks. I actually don't want to take up the time, but that's what I do. I go through and I look at where these things tend to go around. Today, for example, Amazon just really came into play and they pushed it up $147. It was up higher than that. It was up over $150. And then, they backed it back down, but it's sitting at 3,700. That went through all of the 3,600 strikes, all of them. That's what it pushed through today, and half of the 3,500 handle. So it just pushed through all of those strikes and sitting at the 3,700 handle. So that's a huge move. And there's a lot of options that they're going to have to trade in between, and that likely have traded. I'm talking tens of thousands of options at various strike prices. So there's a lot of stock at play within Amazon. And there's a lot of stock now coming into play through Apple. Apple makes a huge move today. Apple moves back above 150 and then just keeps going. So Apple ends up, at one point it was up over $5. So it had pushed above and then started the day kind of waffling around, but then suddenly just caught fire and just went through 155 and right on it. So that's pushing through strikes in Apple, and we have to have adjustments. So today's stocks that reported, you have Intuit that's up $88 after earnings. You have Google, which got pushed back up above 3,000, and not a great gain over. It was already up 35, but it kind of gives you a hint that they're pushing in the direction that's where they're intending to go. So we have a lot of that in play, and that's going to stay in play, and that's going to keep the volatility really high in these markets. So trade smart. Trade using your moving averages. Trade using the Fibonacci, the levels. That's, if it's headed, that's where it's likely going to go. And just trade smart and use good risk management. Have a great trading day. Our next update will be on Sunday, the 21st.